Hello there. I'm Drew Brenner, Senior Loan Officer and your mortgage advisor over at Willow Bend Mortgage, and I'm coming to you in this video to talk about interest rates and specifically what determines your interest rate whenever you're looking to buy a home. Now, the first main thing is going to be the type of loan. So that's whether you're getting a conventional loan or more like an FHA or VA loan because they look at things differently. So let's start with conventional loans. Now, there's 3 or 4 main things that are going to determine your interest rate whenever you're getting a conventional loan. The first one's going to be the way that you're buying that home, meaning are you buying it as a primary residence, a second home, or an investment property? Now, investment property loans are definitely going to have higher interest rates than a primary or a secondary home. So that's number one. Number 2 is going to, of course, be your credit score. That's a huge thing in determining the interest rate. So the higher your credit, generally, the better your rate's going to be. On a conventional loan, 740 and above is the top tier. So whether you have a 740 or an 800, your interest rate's pretty much going to be the same. And from 740, it goes down in 20-point increments all the way down to 620, which is the minimum score for a conventional loan. So that is 720 to 739, 700 to 719, and so on. And depending on which tier you fall into will play a big role in determining what your interest rate's going to be. Now, there can actually be a full percent or more difference between having a 740 credit score and a 620 credit score on a conventional loan. Now, the third thing is going to be, of course, your down payment percentage. Now, there's what's called the loan level price adjustment that conventional loans have that has down payment percentage on one side and credit score on the other. And depending on where you fall in that table, there are different hits to the interest rate. So generally, if you're putting between 5% and all the way up to 19.99% down, the rate's going to be pretty much the same. Then strangely enough, and this is actually very counterintuitive, not sure why they do it this way, but if you're putting 20% all the way up to 24.99% down, so just a little bit less than 25%, so basically 20 to 25% down, then your interest rate could actually be slightly higher than if you were doing a little less or you're doing 25% down or more. It's probably because a lot of people put 20% down and they no longer have that mortgage insurance, that PMI, and so I guess Fannie Mae just thinks that you're just slightly not quite as much a credit risk as you were before if you were doing less than 20% down, and they hit you a little bit on the interest rate. So that down payment percentage is definitely a very important part of it. Now, the fourth thing is going to be the loan amount. Generally, lenders, they need to make a certain amount on a loan, and so, of course, the higher the loan amount, the more money they make. So typically, the higher the loan amount is, the better the interest rate is going to be. It may not be huge, but it could be an 1/8%, a 1/4% better. If you're below 100,000 compared to if you have above 100,000. And different lenders have different cutoffs. Some have 250K, some have 300, 400. Different amounts where if you go above that, the interest rate could get slightly better. All right, so those are the 4 main things that determine the rate on conventional loan. Now, on FHA or VA, it's a lot more simple. Generally, FHA and VA aren't going to hurt you that much on the interest rate for having lower credit scores. Usually, if you've got above a 620 credit score, the rate's generally going to be about the same, whether you have a 620 or a 700. You might have a small difference, but it's not going to be anything like a conventional loan. Now, if you fall below 620 or below 600, which FHA and VA do sometime allow, that interest rate's going to start going up quite a bit. So you definitely still want to try and get your credit score up, above 620 because it will help on the interest rate. Now, FHA and VA, depending on the lender, also could give you better interest rates for having higher loan amounts as well. So that's kind of across the board. So that is kind of my demo on interest rates and how they work. So if you've got any questions or would like to get pre-approved, please give me a call. I would love to help you. My number is 214-282-6387. My email address is really easy. It's just Drew, D-R-E-W, at WB as in boy, M as in Mary.com. Drew at WBM.com. So please give me a shout. I would love to help. And otherwise, I will see you on the next video.